and ONGC. They together form a big portion of the Nifty, and hence were dragging, remained a big drag. Power stocks is something definitely happening there, because consistently we are looking at higher, bigger numbers over there in terms of the intraday moves. The volumes are improving, so Power Grid came back in style, and Tata Power has already been moving higher. Star of the session, GSK, had its own rub-off effect on some of the other MNC stocks, but little to read, because it could be termed as a one-day move, and really have to see how it pans out from here on. So a couple of trader favorites like Titan, PC Jewelers, all of them came out in trade, and there was surely some kind of a breakout happening in select mid-cap stocks. Aurobindo clearly leading from the front among that particular pack, and Delta Corp also in 3 digits now. So clearly it may be looking like a very optically flat market, but it was not boring by any feat of imagination. A lot of interesting moves coming in. FNOQs shows that on low volumes, some long positions are being closed, and some brave traders are initiating short positions. So premium is shrinking because of long closures, but at the same time, around 7 lakh shares got added in open interest, indicating that some shorts are piling up on the Nifty ahead of the meet. But of course, take into account the 5 days of underperformance, they may actually choose to cover exactly on the event day, which is tomorrow or day after. Look at the call option activity. 2 to 4 lakh shares got added on the 6,200 to 6,300 calls. One can assume mostly the other writers who want to pocket the premium. On the downside, immediate support can be seen at 6,000 to 6,100. In fact, 6,150 is where we took support today. Let's see whether market obliges, even on the back of a massive underperformance of last 5 days, continues to go down, or those shorts which are already in the money, we are continuously grinding lower, they may choose to take some profit off the table. So by tomorrow, things definitely will be clearer.
Okay, but time then to talk markets, and in fact today we decided to put the spotlight on how you should be positioning your trades as we prepare for 2014. A very special guest joins in this evening. Parag Parikh, who is the chairman of Parag Parikh Financial Advisory Services, is here with us as well. Thank you so much, Parag, for taking time out for us. As we head into 2014, what is it that you're preparing for? What's the investment environment you think going to look like next year?
First is thank you for giving me an opportunity to talk to you. And 2014, how it's going to be, I'll tell you, my guess would be as good as your guess. It's very difficult to say, because we are going to be in very turbulent times. We're going to have the elections, and this time the way the elections would be sorting out is going to be quite different than every year when we have elections. The UPA government not coming to power is a foregone conclusion. Even the leaders like Manishankar Iyer, they have been saying that. So I think talking about the UPA coming to power or not is not the decision maker. The idea would be who would come, what chaos would be there, and what would come out from those elections.
Parag, what's the best case or the worst case scenario which can be played out from the market standpoint? What would you watch?
I would say that whatever party comes to power, or whatever the euphoria in the market is, you are not going to get a bull run, which is going to be where all the stocks just start going up. It's going to be certain companies which have good bases, which are fundamentally right, a good business model, they will do well. But companies which are having big structural problems, which are heavily debt laden, companies which have done really well because of their political masters and all, I don't think those companies will even improve if any government comes to power.
So you mean that investors should not really expect a synchronized up move in stocks, and hence more stock-specific moves are expected?
You have to, it be in certain stocks, certain sectors. Like if you ask me, what will happen to the infrastructure, the real estate sector now? I don't think still, if they're a bull run also, these companies have too many structural problems for them to really come out.
So how is it that you're approaching stock picking right now? Give us an idea on how investors should go about doing this, because the past few years, several stocks have remained low, even when their businesses actually have grown.
When we invest, we look at businesses. We invest in businesses. And businesses which are run by credible management, businesses which have a good moat around them, like patents, distribution network, brands, businesses which require least amount of capital, which require least amount of debt, which has a pricing power, and above all, if they are available at right valuations. I think this is the way we look at businesses. So I don't know which stock will go up tomorrow or not. But one thing I know, that if I have chosen the right businesses, like what you just mentioned, that certain businesses, even though the profits and sales are going up, the stock price is not going. Really, looking at the stock price misleads you, because the markets where the stock is listed is made up of irrational people, and the markets are always inefficient in the short run. And it is because of the varying sentiments of the investors, a stock which may be good also could be beaten down. As we saw in this last 6 months, the way the markets have been going down and going up is nothing to do with the working of the company. It's only got to do with the basic sentiments of the people. Sometimes they are in good sentiments, sometimes it's bearish.
Parag, since we are talking about sentiment, what is it that HNIs are saying to you? I'm sure you talk to a whole handful on a daily basis. What's their mood like?
See, when you are talking about those people who are thinking whether they'll return or they'll shy away, they think they really don't form a part of my client portfolio, because those are the traders. Because you cannot be running after markets, you got to have conviction in the markets. So out of the full population, we have certain clients, or we have taken those clients who believe in the long-term approach to investing, And on the contrary, when the markets are down and all, we get more excited because good valuations are available for investments.
Right. Parag, so according to you, which are the sectors and themes one should, stay away from and are a complete avoid as per you?
As I told you, infrastructure. They require huge amounts of capital. They are dependent upon the government's sanctions and all. And real estate. As far as real estate is concerned, there also builders have become actually investors. And today there is so much of property which is built up, and the prices are just going up, thinking that there is a demand. No doubt there is a demand, but you have to also understand whether those people will be able to pay up the price. Even taking a loan, a couple working, even if they take a loan and buy a house, the way the real estate prices are, where the interests are, you think they'll be able to really live a proper life after paying the installments? It's very difficult.
Right. Tell us about some themes where investors should research on and find good investing ideas.
See, as I told you, we go with a bottom-up approach. So we really don't look at the sectors. Now, this is typically what happens in the markets. When a sector is hot, you have a lot of companies coming with IPOs in a hot sector. And then also you have mutual funds coming out with names like real estate fund, infrastructure fund. Now, when you are going with a hot sector, or where everyone feels that the sector is going to be hot, what happens is you are buying a fancy. When you buy a fancy, you pay a fancy price for it. And when the fancy ends, you have a fancy loss. That's all. So we are this thing with a bottom-up approach. We are really looking at the fundamentals of a company we are investing in.
Parag, since fancy seems to be the word, a stock that's really caught everyone's fancy today has been GSK. Not just that, but even MNC stocks have perked up in trade. What's your view on, multinational company stocks in India? Several of them have been your favorite for a while as well.
Not today. They did make a difference about 10-15 years back when they were available at good valuations. Today what has happened is, because the markets are down, and there are no other stocks which are going up, only the this thing, Ferra stocks, you call them like Nestle, Hindustan Livers, fast-moving consumer goods, when they are going up, fund managers think it's better to be invested into those stocks because it gives them the level of comfort, and they don't want to take a bet outside that. But if you ask me, those stocks available at 45, 50 times earnings and all, I don't consider them as cheap.
Parag, thank you so much for taking time out for us. Such a pleasure chatting with you. Parag Parikh there talking to us about, of course, what he's making of 2014 and what themes and sectors look good to him at this point.
All right, on that note, let's take a short break. But up ahead, Blackstone restructuring